Hello and welcome to this week's edition of the Clinton Howell Team's Weekly Market Update. I'm your host, Clinton Howell, broker with RE/MAX Escarpment Realty. Today is February 29th of 2024. What's happening in our local markets? Well, this morning I attended a brokerage meeting held by Conrad Zarini and the team at RE/MAX Escarpment, and it was very eye-opening. There were some amazing articles brought to all of our attention. I'm going to share some headlines with you, but the discussion was really about why we're at the bottom of the market now and why we're not going to be seeing the current prices ever again moving forward. First of all, supply and demand is a serious problem in this country, as we know, and it's just getting worse. CMHC forecast underestimates population rise and housing need. The Canada Mortgage and Housing Corporation's forecast for how many homes will be required by the end of the decade falls 1.2 million short. This is insane. So we've got a major supply and demand issue in this country, which is going to keep driving the prices up. Look at this graph behind me. Exceeding the speed limit, it's called. Adult population growth, serious spike. Look at that. 1 million people come into the country. Meanwhile, housing starts have barely blipped off of their usual line. Inflation rate cools to 2.9%, back inside the Bank of Canada's target range. Interest rates are on all of our minds. The interest rates are out of control. We saw 10 rises in the interest rate in a very short time, and it's causing havoc on so many people. We're seeing there's 30 to 40% of mortgage renewals coming up in the next 12 months, and there's a lot of stress, a lot of issues around this. We are expecting to see interest rates starting to decline, possibly starting in April, most likely in June, and by the end of the year, most of the major banks are anticipating that we will see 1 to 1.25% reduction. When we start seeing the interest rates go down, the demand will continue to rise, and the prices will start to go up even more on the housing. In the Hamilton market, we're seeing unit sales dropping over the past couple of years. Same with Burlington, we're seeing unit sales dropping over the past couple of years. Oakville, same thing. This trend is happening everywhere. Currently, we're finding in the market a lot of sellers that would love to sell their properties are concerned about the price points, the price levels that we're at. So they're holding off. They're waiting for the interest rates to start declining, and then they'll start bringing their properties to market. So that's going to help to balance things out. But at the same time, we're going to have demand increasing drastically at that same moment. Google Trends, this graph's interesting. If you look back there and see the single spike, that's sort of about 2/3 the way back on the graph. Well, that's when the pandemic started, and that was showing that on Google, huge spike in Bank of Canada and interest rate searches. And if you look at the past year and a half, all the spikies up and down, that's showing that interest rates in Bank of Canada have been the most popular searches on Google, much more so than listings and other information about real estate. So interest rates are very much on people's minds. From a buyer perspective, this is an interesting chart here, but unlike buyers, sellers look for an agent first. So this is really interesting. So buyers should be talking to real estate agents way when they're first starting to think about it, to talk about the buyer process, to get steps in the right order, getting mortgage pre-approvals, and discussing, how negotiations work, setting up searches. So the buyers really need to be talking to realtors early on to give themselves a leg up advantage in the market, especially now when there's great opportunities to be had. Bank forecasts, this chart here is showing the predictions of all the major economists and major banks, and pretty much as a general consensus that by the end of the fall, we're going to see a 1 to 1.25% reduction in the interest rates. What is specifically happening in our local markets? Let's start with discussing Burlington. Currently, there are 335 active listings in the Burlington area, which is up from 322 a week ago. 193 sales in the past 30 days, also up from a week ago, which was 182. 1.75 months worth of supply. This is down again, so this is a very short amount of supply for Burlington. 64.33% absorption. This is seller's market territory. Median days on market is at 15, so properties are selling very quick in terms of the median average. The overall average days on market is still around 30, which is down from 31 a week ago. Most negotiations of successful transactions are happening with around 2.5% discount from the asking price. In the Hamilton area, we've got 1,157 active listings, which is up from a week ago. 495 sales in the past 30 days, which is up also from last week. 2.34 months worth of supply, which is slightly less than it was previously. And we're looking at 57.03% on the absorption. which is again tipping toward the seller's market side. 57.03% is referring to the percentage of listings that are getting sold within the last 30 days. Median days on market is 20. The average is 37. Median negotiations, 97.44. So we're seeing again about a 2.5% negotiating spread on most successful transactions. In the Oakville area, 315 active listings, which is up from last week. Same trend here. 142 sales in the past 30 days, also up from a week ago. And we're seeing 2.2 months worth of supply, which is down from last week, getting tighter. Still overall a very balanced market in Oakville. Median days on market has actually dropped to 14, while the average has stayed up, but still down a bit from last week. The average is 29 days. 97.82 is the typical negotiation in terms of the median sold price versus original list price, and that's just over 2% on that on those negotiations. That's all I have for you today. If you have any questions, please DM me. Thanks for tuning in, and we'll see you next week.